Just wanted to do a follow-up from yesterday's video. Got a few comments that possibly suggested maybe you misconstrued that I am only bullish on this market, and I am very much aware of the issues that we're having here, and the possibility that the Fed's going to get what they want and basically push the market down to more reasonable valuations to get ahead of inflation. I'm fully aware of it, and somebody in our Discord channel posted this. It was pretty funny. I just want to let this one play. It kind of summarizes what may be happening with the Santa Claus rally, and I'll kind of talk about what's going on in the charts here in a second, but this was funny. I just let this one play. And you gotta watch to the end too. Hold on, it's coming. I mean, it could be happening. So, all right, what's going on? So I am still tracking a bearish count. I am very much aware of the possibilities that from a fundamental point of view, from earnings revisions from 2023, where are we going to be for the year in terms of earnings? And is it 220? Is it 210, 200, 190? We have to get more clarity on that in terms of what's going to happen in 2023 and for Q4 earnings of 22. So I'm very aware the Fed is trying to tell us that it wants to push us down into further price levels. If you look at where we are with the Fed funds, and this is what's interesting to me. The internet's been weird, by the way. I hope we're having pretty good ice and windstorm here. But if you just look at where we are, Fed funds, going into the Feb 1 meeting, there's a lot of time until then. We've backed off 10 basis points of a 25 basis point increase in Feb. We're still at a 66% chance of 25 bips. And then I think the big story is, where's terminal Fed funds? Is it 5? What's the chance that we get a 5 handle? And right now the market is only putting a 23% chance at the next meeting that we get a 5 handle. And that's been pretty consistent here, 54, 55, 55 over the last week. And it's up from 40% a month ago, right? So if you go out even to May, again, we have 32 plus 6, call it 38% chance of getting a 5 handle. And that's much different than what the Fed is saying. And if you look at those long-term rates, again, 5+ years, something isn't matching up here. So we shall see. I am very aware of what's going on. So here is the way we're handling this scenario, and we have very clear cut with our members actionable game plan as to how to handle the bullish situation that I set forth yesterday and square up with the bearish situation that we have here on the S&P. Now, I did a video about this probably 2 weeks ago on YouTube and called it the triple Lindy, right? It's the Rodney Dangerfield of correction. Some people assumed it was the correction that gets no respect. No, it's the triple Lindy from the movie Back to School, the dive Rodney Dangerfield did. So this is very much in the running, which it's a triple correction. This is like PhD level Elliott wave analysis. It's 3 Elliott wave corrections connected via 2 X waves. X waves are connectors. So the first one is ABC. It's a zigzag connector X. ABC zigzag. Now the question on the table is this a big A, B, C for the third zigzag? And if that's the case, we're looking at 3,200 in the S&P. Now, if we get off the daily down here, and before we do, guys, a couple of people push back. I'm very aware that it is quite an effort to count this as a 5, to consider it to be impulsive, fully aware of it, right? But it is still possible, all right? And I'll talk about that in a sec. So off the daily, let's get down to the half day, showing you a few more levels of wave degree. The fact remains that if in fact this is another complex off the lows from October to from October to December, the fact remains we do have a 5-wave move down off of these December highs. So it's a nice 5-wave move down. We tracked it perfectly in the Discord channel with our members, and either way, bullish or bearish count, which we break down here in Motive Wave Red and Blue count, either way, it looks like we need to have a 3-wave relief rally post 5-wave move down, and that's just the way it works on either red or blue count. What happens here once we get up to the typical retracement zones of any 5-wave move will then shine the light on where we're going in the future. And guys, I have shorts on. We have hedges for the trading analysis side. I have hedges in the wealth management side. We have some inverse ETFs. I have treasuries as a top 5 holding in our growth portfolio. So I get it. I fully understand. It's just I don't think too many people are expecting a rally that would exceed the possible retracement zones. And I mean, I'll even show you the trades I have on. We have a Q short that we extended lower yesterday. Started out as 277.5, 270 put spread. I did another put debit spread and extended the reach lower. Still have the target trade on, extended that one lower. So you know, we certainly do have hedges on. So we shall see what happens once we and if we get up to the zone. The market is trying to move on up. And one thing that I would bring your attention to is looking at some of the internals of the market. All right, so let's pull up the tick, NYSE tick. This indicates institutional buy-sell programs, massive divergence here on the low moving average. So I put an MA on tick to smooth it out. This is a 60-minute chart. This dates December 6th, which was the low moving average reading in tick, compared to a higher low to where we are now. Here's the S&P in purple right here. So December 6th was here, that low. So the tick reading, which indicates, again, the institutional buy-sell programs, you have negative tick readings exceeding -8 to 900. That indicates sell program. Somebody hits the button and sells a big basket of stocks. That's institutional activity. So we got more selling activity up here than we did down here, post 5-wave move, as well as you look at some of the activity in terms of put options that have been bought. This market is so heavily hedged. It's unbelievable to me how low the VIX remains with so much put buying activity. So I don't want to be caught off guard if this Santa rally doesn't have his head cut off and beyond. So I just wanted to bring that up. And then, the other thing I would bring your attention to is somebody, explain the semis to me. Explain how the semiconductors have a clear 5-wave move up. It's really hard, I think, to call semiconductors anything but a 5. And where the 3-wave correction post 5-wave move in the semis resolves itself, we shall see. But that's constructive off the lows in semis, and that just ties itself back into the idea that I don't want to be caught off guard. I have cash in the sidelines. We do have short hedges on, and if that retracement zone that I just highlighted turns into something more, we're going to be quick to unwind those hedges in cash and put money to work. All right, just wanted to throw that out there. Hope you guys have a great Merry Christmas to those who celebrate. Happy Hanukkah, happy everything else. Hope you guys had a okay year. Hope everyone got through relatively unscathed. And here's to a great 2023. So thanks, and I will talk to you guys. I'll be back next week. So, all right, see ya.